All right, so this is the supplement for week 9. This will definitely help you with section 8.2 doing these income tax problems. So they start out, we're always going to use this 2016 tax rate table. Okay, so when we're filling out these taxes, be careful because there's really 3 steps that are involved here. Okay, you have to find the adjusted gross income. So that's normally the gross income minus any adjustments, and that gives you your adjusted gross income. So that's really step number 1. Then from there, we need to find the taxable amount. And the taxable amount becomes your adjusted gross income minus any deductions. Okay, and we're either going to use a standardized deduction, which you notice is on the bottom of this row, okay, or an itemized deduction, whichever one is larger. Okay, whichever is larger. Okay, because you want to deduct from your income so you pay less taxes. So also from your adjusted gross income, we're going to subtract the exemptions. And the exemptions in 2016 were $4,050 per person. Okay, so it's times the number of eligible dependents. This becomes what we call your taxable income. Okay, and then you need to compute your tax. Determine which column to use. So single, married filing separately, married filing jointly, or head of household. Okay, it'll say on the tax how we're filing our taxes. It'll say a single person or married filing jointly or head of household. Those are probably the 3 most popular. Determine how much is in each row. Okay, determine where you fall into each row on your whatever your taxable income is. Okay, so it's not just 20% of whatever you make. You pay different amounts on different money. Okay, 10%, 15, 25, 28. We pay different interest rates depending on where we fall. Okay, multiply the interest rate by the amount in each row. I'll talk about that in a little bit. And then our last step is always going to be to subtract any tax credits. Okay, so that's kind of the outline here. Let's take a look at an example. And I've done one, kind of worked all the way out, and then I'll do another one where I show you the actual computations. All right, so let's see. Suppose we have a married man who has 2 kids who makes $95,000 gross income. He has $2,000 in adjustments, and his deductions are as follows. He pays $15,000 of mortgage interest, $25,000 in property taxes, and $1,000 in charitable contributions. Those are all deductions. And he also has a tax credit of $1,500. Okay, so let's compute his income tax. So the first step is to find the adjusted gross income, the AGI, the adjusted gross income. That's pretty straightforward. Just take the $95,000 that he makes and subtract the $2,000. Okay, that gives me a total of $93,000. That is his adjusted gross income. Okay. All right, now for deductions, if I add these up, I get $15,000, $25,000, and $1,000. That's $41,000. Okay. He's married, and I guess I didn't say on here, but we're going to file jointly. Okay. So if I look at the standard deduction for married filing jointly, it's $12,600. Okay. Since his deductions are $41,000, that's a lot more. We're going to use this as a deduction, and that's what we're going to subtract. So we're going to take this $93,000, subtract the $41,000, and that gives me $52,000. Okay. Then I have to subtract my exemptions. Okay. So since he's married and has 2 children, okay, you always count yourself. So that's 1. His spouse, and then the 2 kids. That gives me a total of 4 exemptions. So 4 times 4,050 gives me 16,200. So I'm going to take this 52,000, subtract my exemptions, and I get this 35,800. This is what we're going to be taxed on. This becomes my taxable income. Okay, and then we need to compute the income tax. So since the taxable income is 35,800, it puts him in the 15% tax bracket. So let me show you where that is. So again, 35,800 was his taxable income. So married filing jointly, 35,800 falls into this row. So he's in the 15% tax bracket. Okay? So he's not going to pay 15% of this. Everybody pays 10% of their first 18,550. Okay? All right. I choose the wrong column when I did this last time. This should be 18,550. That's in the first category. So I'm gonna change what we're doing here. Okay. I'm gonna take the 35,800 minus 18,550. Okay, that gives me 35,800 minus 18,550 gives me $17,250. Okay, so that's how much is at 15%. Okay, so again, everybody pays that 10% of that initial threshold, and you only pay 15% of what's in the second one. Okay? So my income tax is going to be 10% of 18,550 plus 15% of 17,250. My income tax is going to be $4,442.50. Okay? I had a $1,500 tax credit, or he had one, I should say. So his income tax is going to be $2,942.50. That's how much income tax he owes. Okay? All right. So again, you can see the different steps. It's a lot of additions and subtractions, but other than that, it's not crazy arithmetic. All right, so let's do another one, and then I'll leave the third one for you. Let's suppose we have a single woman who makes $145,000 of gross income. Okay, doesn't say she has any children, so she's her only dependent. She has $4,000 in adjustments, and her deductions are as follows: $25,000 in mortgage interest, $20,000 in property taxes, $2,000 in charitable contributions. She also has a tax credit of $3,000. So what is her adjusted gross income? So this would be step one. I'm going to take $145,000 minus that $4,000. That gives me $141,000. That is her adjusted gross income. Okay? Her deductions, her itemized deductions are $25,000, $20,000, and $2,000. So 45 and 2 is $47,000 in itemized deductions. That's a lot more than the standard deduction for a single person is only $6,300. Okay, so we are going to use these for deductions. Okay, so the first thing I need to do is find her taxable income. So I'm going to take that $141,000 and I'm going to subtract her deductions. That gives me $94,000. Okay. Then she's her only exemption, so I'm just going to subtract one exemption of $4,050. She has a taxable income of $89,550. Okay? So that becomes her taxable income. So now I go back to my chart. She was single, making $89,000. She's in the 25% tax bracket. Okay? So I'm going to leave this chart here. Hopefully we can still see it. Yeah. So the first $9,275 goes to 10%. Think of your income on this number line. So here's the 9,275. Everybody pays 10% of that. The next number is 37,650. 37,650. Okay, and then hers ends at 89. Normally I would go out to 91, but hers ended here. Okay, so how much is in here? Well, we went through the entire interval, so it's 92.75. How much is in here? Well, I'm going to take that 37,650 minus the 92.75. It's 28,375. How much is in here? I take the 89,550 minus that previous endpoint of 37,650, and I get 51,900. Okay, so that's how much is in each one. This was the 15% tax bracket. This was the 25% tax bracket. So my final income tax is 0.1 times 92.75 plus 0.15 times 28,375 plus 0.25 times 5,100 or 51,900. So I would type it in just like that. And I am getting $18,158.75. Oops. So that's how much tax she owed, but I believe she had a tax credit of $3,000. So this is going to be $15,158.75. So that is her final income tax. Okay, so again, the things you need to be able to do: find the adjusted gross income, find the taxable income, and then calculate the final income tax. This tends to be the hardest part, is splitting that money up depending on what interest rate she was at. So I'm going to leave this last one to you. If you get an answer and you want to email it to me, I'll let you know whether it's right or wrong. Okay, so leave that last one, practice that. This should definitely help with section 8.2. Okay, so I hope that helps. Good luck. Have a great weekend.